It's a pleasure to be here. Thank you, Andres Rosenthal, for this invitation. Thank you. We'll delve into one of the most outstanding topics, and that raises great concern for the populations with other deciles of income and areas of the government. Inflation. In Mexico, we are seeing the highest inflation in 21 years. I had a meeting with entrepreneurs, and I raised the topic of inflation, but he said, "Oh, Valeria, it's not the inflation of the 80s. It's only 7%." But I said, for 48 million Mexican people of less than 21 years old, it is the highest inflation they've ever seen in their lives. And so, since young people are used to the inflation, and because of other historical issues, inflations of 3 and 4 when it was high, but then all of a sudden a 7% inflation, that inflation is very different and just changes the rules of the game. We're seeing the highest inflation in 22 years. In the U.S., it's the highest inflation in 40 years. In Europe, they're seeing inflation rates that they didn't even know. Most of the living population, they didn't even know that, but there are populations with not so much inflation. Panama, the last inflation reading was 3.5%, and a few months ago they were 2%. But you all know Daniel Becker and Alejandro Werner, well-renowned economists. He worked at the IMF. If anyone can give us insight about what's happening with the inflation, what is it we can do with the inflation? Because this is a recurring question. Can we do something about it? Is this a phenomenon that we'll only see go in front of our eyes and we won't be able to do anything about it? So this is where we need to understand what actually works to start to stop inflation, because of course we can say things, we can do things that will have no real impact in anything. So let's start with the questions, and then we have our 25 minutes for questions from our audience. Daniel, you're obviously in the banking world. In the banking world, the inflation is one of the most important variables because it determines the savings of people. And when people invest their money, deposit their resources in the bank, they hope to have some yields. Not enormous, but some kind of a yield. But when the inflation is 7%, there's no interest rate in the resources, in the services, in the usual products that pay a real interest rate and dividends. So what we're discussing is if we're seeing an inflation of the offer or inflation of the supply. Well, in the U.S., the inflation comes from the demand because they invested great amounts of money in fiscal policies last year. And on the other hand, we also have it in the demand because of the productive chains. In Mexico, we had no fiscal supports in Mexico. We can consider it being generous, 0.4% of the GDP at the same level than Uganda. Well, I'm not saying that. It's the figures that say that. I don't have a phenomenon of demand, but we do have a phenomenon of supply. So how can we explain this inflation process? Last year, when we were told, nothing's happening, this is a transition. So how do you view it? I will thank you, HSBC, for the invitation. Valeria, thank you so much. Well, you were talking about what's happened in the 2008-2007 crisis. The inflation rate in Mexico, 8.25, with a maximum inflation of 6.53. So we're well above the threshold. And Valeria, you raised many questions that could be well answered. The users of the banking system always aim for a real rate. And now, having said this, automatically this sets a potential trend from the Bank of Mexico about what's going to happen. And I think Alex has been seeing that there's always a national stress between the Minister of Finance and the government because there are in-depth discussions, the participation of some of the actors. In Mexico, this does not come from the demand, but the shocks of the supply and the imported goods. So we have an inflationary situation that could trigger important issues. And at the end of the year, if the estimates from the Bank of Mexico are fulfilled and if we're only collecting the information from analysts and the inflation rate would be around 8%, and we'll start seeing real rates for the savers and people's savings that do not exist. Now, the discussion, how much are we importing inflation rates from the world? We'll listen to Alex next. But what's undeniable is that there's an inflation surge that we hadn't seen in many years, and whether it's the offer or the supply, the instruments of the banking system, it's the monetary policies, and the bank always has to anchor and have inflationary expectations, regardless of anything. Whatever is temporary is becoming permanent, and as the inflation rate grows, we can have a different gaze into it. But what we will see is an environment of restrictive policies. Now, the advantage, the asset for Mexico is that Mexico never lowered the rates as other countries did, and no fiscal incentives, and never below 4%, although we saw 300 basic points of increase in the monetary policy. But let's see if we will be able to get away from the fiat increases and policies. So we will try to look into it and see if there's a decoupling in the wake of what the bank has done. And we'll see an increase because that topic has been raised on several occasions. How sensitive is the increase? Are the rates of the central bank in regard to the money equal to 1? What we're seeing, actually, although the rates have increased, we're seeing marginal increases. That does not mean that will stay at that, but I can say that the increases for credit do not behave linearly, symmetrically, and between the increases of the Bank of Mexico and the bank, there's no correlation, and based on the competition. Let's talk about the rates. That goes to the second question. Alejandro, you've been working for a great many years in the U.S., and you perfectly know the Latin American economies. The inflation we're currently seeing in the case of Mexico, is it an imported inflation? Is there something here? Or maybe we can see, don't look at me, just don't look at me, everything comes from the United States. Just don't point fingers at me. Valeria, it's good to be here with you. Thank you, Chatham House, for the invitation. Well, you raised many questions, many comments, so I will try to come up with an answer and try to adapt them to the framework in Latin America and its economies. The comment you were conveying and the comments raised by some entrepreneurs are true on the one hand, and on the other hand, the implications were, since we have nothing to do with that, let's not worry about it, but that is wrong. From the viewpoint of the root causes, the inflation in Mexico and many of the Latin American economies, these causes are triggered by the shocks of the demand of the supply, but it's still the highest inflation rates in the 20 years in the U.S., the highest inflation in 40 years, but the inflation is the most regressive tax we know that exists because most part of the population cannot protect their savings. What Daniel said, they have no access to the best savings vehicles that adjust their rate with the inflationary increases. And in this cycle, this inflation cycle, we can see the great impact because the inflation is really concentrated in products that have greater representation in the consumption basket of the poorest people in society. So, on the one hand, well, we can see reassuringly that this is not a product of a whole set of political policies that got to this equilibrium and that the political economy that led us. It is hard to get out of that because we just landed in a very high fiscal deficit after the inflation of the 70s. But there is an imported inflation and we have clashes of the offer in many products and in many other commodities, and we would hope that this would not happen again. But as Daniel said, with a larger basis, the increase of the prices will be much lower, that the inflation will start going down. But we should first be concerned about one important segment of the population and they have very few instruments. They have practically no savings to work with key products. And from the macroeconomic stance, what we mean to say, let's say the inflation was only triggered by the increase of the international price of wheat, and that we are a country that imports wheat. So as a country, we're even poorer because now if the wheat went up 100% and our basket, we consume 10% of the basket in wheat, we have to spend 10% more in wheat. So other wages will go down, the prices. So if we all try to be at the level of the wheat will always be farther away because we'll never get to the point where wheat is more expensive. So the role of the Bank of Mexico, although it's an outer clash, we should stop that race trying to reach wheat, oil, the manufactured goods, and so on and so forth. So this is a role of the bank. And instead of being public policies that were implemented and that are triggering that phenomenon. So we need to avoid this race, chasing oil, chasing wheat, where we will give more permanence to this clash. That would be the challenge. Now, in regard to the budget, the Ministry of Finance and government, they should focus rather on providing instruments to the poorest sectors of the society to amortize to the blow with the public revenues and to implement policies that should have been implemented anyway, because in some sectors with great market power, these are not instruments to lower the inflation. But if that helps to implement the measures to abate some of the prices with monopolic rents that are important, well, welcome. So that would be the smarter way to go about it. So where's Latin America? Where's Mexico and Latin America? And so allow me to digress here in regard to what was said, and I'll do it at the end. Mexico is probably the country where inflation has the greatest offer component. Based on what you said, the Mexican economy is the only economy out of the large Latin American economies that has not gone back to the 2019 product level. So that means that although the potential product went down because of the pandemic, it is most likely that the Mexican economy has a great leeway if compared to Chile. In Chile, the central bank is saying not only did they reach the 2019 level, they went over it, and the difference between potential and where they find themselves is positive. And so they already have an overheating process of the economy. This is an result of the public policies that were implemented to face the pandemic. So maybe talk about 3-4 potential factors that are leading the inflation. The actors of the offer, that you and Daniel mentioned. The second one, all the elements, the demand elements. We could measure that. How fast are the economies recovering after the pandemic? And the third one would be the complications of the expectations after the expectation, and then the fiscal prevalence. I would say that in Latin America, everybody is being affected by the offer, by the supply in countries that are now well advanced in their reprisal. Brazil, Colombia are at that stage. Then Colombia and Mexico. Mexico is a country with a lesser component in regard to the demand, and now the countries have to face and avoid these second round inflation clash in order to not get in the race. Chile and Brazil should try to close the demand gap, especially, and Chile also has a situation because of their high debt. There are certain doubts about how they will solve their public finance and heal them, and see if the government and the central bank could tolerate a situation whereby through financial repression or using lower interest rates to fix the fiscal chaos. So to have an instrument to solve the fiscal situation and accepting the inflation. These factors do not exist in Mexico. We have the offer, the concern that the salaries and other prices do not start the race. And I would add, Mexico is in a good position because in regard to the fiscal sector, we didn't do anything during the pandemic. Very little. Well, in regard to the public policies, I'd rather have issues having done too much to help my economy get out of a problem, especially helping the most affected sectors of the population, the companies that the medium and the SMEs that were really hit hard, and then having to grapple with a larger problem, not have such an important problem, but because of a lack of action to reprise our economy. So now, in conclusion, I do believe that since Mexico is right next to the U.S., having the trade relations we have and the remittances and all that, the Mexican economy would need to be the leader of the economic reprisal in Latin America, not the one trailing behind in the recovery. And so this is the main key of the problem, but that has to be looked into in the in this scenario. Well, the GDP is at the same levels. On Wednesday, we will disclose the figures. We're at the same levels we had in the fourth quarter of 2016. So the backwardness you talked about is right there, clear to see, plain to see. But maybe we do not realize the scope of the situation. Inflation is a regressive tax, and it hits the sector with the lowest revenues and more the inflation right now. We carried out a study at IMCO. We see how the different deciles of revenue spend, and the decile invest 50.8% of their revenue in food and food and beverage, and the highest decile only 28% to food and beverage. And if the inflation is now concentrated in buying food and staples, the decile of the low revenues is 8.5 point over the general inflation because of the consumption trends. Now my question, well, you left it aside, but let's go into full detail. There's a particular reason to that. When we talk about, when we look at inflation in this forum, we have the supply components and other voices that say, well, then the monetary policy, what about it? Well, it stops and lowers the demand. And if we have a clash in between demand and supply, why do we increase the interest rate? Because when we increase it, we can decelerate the economic activity. So what good is this? So this is very important. We need to understand that. We need to understand the role of the expectations. Well, yes, you spoke about that. Alex mentioned it. The Bank of Mexico has to work with the expectations. We need to know that the bank is above, above the curve. I was reading Larry Summers yesterday is suggesting that instead of 2% to bring it up to 4%. So will take much longer to recoup the value chains and all the offer and supply clashes, as it was mentioned. But insofar as we have a banking system, you saw it in Acapulco. The president announced the monetary policy decision, and he apologized for that, for disclosing it in Acapulco. But the bank, in this regard, they're doing their work adequately. And what I see is many criticisms and you feel, well, what the Bank of Mexico wants is to sustain the exchange rate. Well, that's my third question. That would be my third question. Please do not sell my plot. Well, this is relevant. I don't personally believe that the goal of the Bank of Mexico is to keep on a stable exchange rate, but to anchor the inflationary expectations forward based on backward demand. The exchange rate has behaved correctly. This is a result of the actions from the bank. And just to round up what Alex just said, and you mentioned it at the beginning, we made a decision, a fiscal decision, to barely support the SMEs in our country. But there's fiscal leeway. And I think that I've had this conversation with the Ministry of Finance. So they want to trigger the economic activity based on the offer and not the supply. But can it be done on the short term? Because the inflation is now, and when you talk about changing the productive processes, is looking onward. Well, what we're trying to now decelerate. Now, the imports of inflation is associated to food and fuels and energy. The question is, these 24 products, you just said it, the most unfortunate decile of the country consumes over 50% of the revenue in the food and staples. And this pact we're trying to come up with, is the aim trying to control that? No, it is an attempt from the government. And another thing Alex mentioned, as of in this fiscal space, the fact that the gas today is highly subventioned, it has subsided. This is a transfer of resources for those who need to have a transportation and food. And we're seeing that the government of Mexico, with the fiscal space they're creating, they're undertaking actions to transfer the resources to help the lowest deciles. Well, you're helping the deciles. Well, certainly, I don't think these are granular solutions, but they're going the right way. Alejandro, you mentioned about support and assistance policies. Well, from the fiscal perspective, transfer policies, how do you merge that with the monetary policy? How do we create a combo the way it's a PASIC, presented in PASIC, or hardline policies to benefit the lowest revenue deciles? What do you do with the monetary policy? Well, three things. In a textbook scenario, now today we're being told to not read anything. Well, we'll use this common workhorse, and then we will look at the reality. What I would think about this is that inflation and the relative adjustments will happen as they have to happen. The offer will react. The producers will have greater incentives to produce more, the consumers to consume less products, since the prices are going up. So the Bank of Mexico do not want to have second round effects, and the government basically focuses on helping 30 or 40% of the poorest population, basically designing a program of assistance programs that are not directly tied to these goods, but to compensate what they're losing because of the increase of the basic basket of staples. So what's your calculations at IMCO? And to say an average, we should transfer resources so that 70% of this clash can be handled by the families via different social programs, etc. Now, the program designed by the government stays halfway through. The gas sector is regressive, highly regressive, because a very high percentage of the subsidy to the fuels is captured by 20% of the wealthiest families in this country. So to subside gasoline, 2.1 of the richest, wealthiest families in the country, and the car that rides behind their car. So that's not the best social policy. So we can better design this policy to give more resources to the neediest families. So with interest rates to contain the second order effects, that is imperfect, and maybe heterodox support that brush up on some prices to soften the price of gas, to not see these great figures and not to trigger any psychosis. That can make sense in an integral package as an assistance in order to limit the reviewal of expectations in the inflation rate. So I think that the combination we've seen in Mexico, we could design these packages. Maybe another group of people would design these packages differently. But let's be honest. Many presidents subsidized the gas to not trigger and unleash political outbursts. So we see that in many countries. So this intuition towards the policy to jump directly into these things, so we can quickly criticize, but seeing that from the bench. But I would say, and what Daniel just mentioned about the interest rates from the Bank of Mexico, they did well. They will keep on increasing the interest rates as inflation goes up. I do believe that the Bank of Mexico has been extremely conservative. They should have lowered their interest rates during the pandemic, and now maybe they should be softer in their increases. Now, the problem is how to affect the expectation. In our textbook, the way we affect the expectations is that we raise the exchange rates.
The prices will be adjusted less. The economic agents know this, and the expectations towards the future, we see there a moderation of those specifications. Maybe there is a psychological factor in the creation of expectations. Communication is very important. That's where the Bank of Mexico is absent. It is not explaining the phenomenon of inflation. Since they see the expectations, then they raise the rates. If this is not so, why do they keep on fostering the ratio of the rates? So I think that expectations should not be used as much in order to not go against the rates. I'm not saying that Mexico is going to have the same terminal rates, 80, 85, or Colombia, which will have a higher rate, where it has a country risk which is higher than ours. What we're doing is that we're doing a bit more. A terminal rate, for example, such as that of Chile, with the experiment that we have seen is there. And I think that we are doing a lot with the monetary aspects here. But Here we're talking about 885 to 775. But I think that the bank should certainly explain more and better and more clearly, and that could give way and make space for the modulation of their increases. And I think that this would help us also to have a faster economic and financial recovery. One more thing that I would like to add. I think that one of the tools that the bank has is communication. Today we can clearly see which or who of the governors took what decisions. And we're talking about the current governor of the central bank. We're seeing here that the curve has normalized. Before, we had seen an inverted curve in Mexico. Now we're seeing it in the U.S. Historically, when the curve is inverted, there is a high risk for recession. And now we're seeing is that there are increases in Mexico and the United States. No, the director of the Fed will raise the rate from 50 to 55 points. So I think that this is something that we should take into account and also listen to the experts where there shouldn't be an inverted curve. Transparency and communication are two different things. I agree with you. The Bank of Mexico is responsible, but also the monetary authority is responsible. We have to see how all of these aspects translate into inflation and the economy and how we will see the bank performing. But I certainly know that some of the things that we have seen, we are seeing a more transparent monetary authority. Let's get away from the Federal Reserve. In the U.S., Mexico started to raise the tariffs in July, where we started to see high inflation rates. It stopped that decrease in rates, but then we go back to that rise in June. The Fed has changed things, the size of the balance, etc. All of this must be taken into account. But when we speak of inflation and when we speak of high rates, we think that the variable is separate from all of this, that it is related to trade and to remittances. But you know much better than many, and many of you know that these variables are linked together very closely. When we speak of the Federal Reserve, if we want to have a certain spread in the real rate, and there are governors who have said that this is so. If we are seeing this situation in June, we haven't seen that much. But that, of course, has to do with the Bank of Mexico, the central bank. This has been done now by the central bank, but not as much as with those of us who have read the minutes and publications by the central bank. There are governors and sub-governors who want to break away from that which is happening in the United States. I think that's a good wish, too. Every time the United States, and this is what we talked about at lunch, every time when there have normalization of rates, there have been great problems. I think we're better equipped than before in order to be able to handle a ratio debt of GDP 51%. If that is going to allow us to discouple ourselves from the United States, then I think that one of the first elements, and we already saw this in Mexico, when there is an increase in the rate, what we see first is a change in the flow of capitals in the U.S. And this is seen in the interest rate immediately. In Mexico, there has been a flight of capitals in Mexico, and we know this. What happens now with the structure, the saving structure in country? Now we see that where there is a destitution of foreigners, and despite the important flight of capitals, that this has been already forecasted, why has the exchange rate been so solid and constant? Well, this has to do with Alex said. We should free the zone of Mexico because of its own capital. We do have a saving structure which is a lot more potent nowadays. Not long ago, we talked to the regulators and we were saying, why are the banks in their balances freeing themselves from the central bank? And here I have to say that there is an enormous liquidity in the system. The lack of demand, because the credit, we in our office have a study. There is an increase in the exchange in the rates, but of course this is associated with growth rates, and these are exacerbated, they leave. So let me say that I think that we have an expectation of growth more on that side than on the demand side. We have a system which is a lot more liquid, and that has become a substitution, which explains that the exchange rate, that it doesn't have an overshoot in our country at this time. So that allows us to set very good qualities for ourselves. If we are going to break away, I think it's much too soon. I don't know if we are going to do so or not in the near future. No, I think in the past 8 years we have done a terrible job. When we want to guide the monetary policy and that liquidity moves, I think that we are not taking into account the objectives, our real objectives. I know that Mexico is super stable in its structure. It's very robust. Mexico is not Canada, but it could move more towards what we are thinking about doing. Canada, when the oil prices fall in 2015, this brought down the interest rates, and now they are starting to increase much more than the Feds. We are not Canada. I'm not trying to simplify things. We could perhaps move more independently than we have in the past. And I think that the case of Mexico, the central bank in Mexico, is so linked to that of the Fed. I think that we have to go further and think more and more about unlinking with the Federal Reserve. And in Mexico, we have one of the most important historical events. We have gaps vis-a-vis the United States, and we have a negative gap. So Mexico must pursue investments in communication, such as the ones that should have been done, with a more complete exercise than trying to land a plane in the international airport of Mexico. I think that already it's too late to be more orthodox in order not to generate any more noise. But we have to take account those lessons where the Bank of Mexico can have a more reactive economy if we take this argument to an extreme. Why don't we use all the capital? Well, we will not have controls of capital. I think that Mexico can have more volatility in the exchange rates and have interest rates that can more focused on the productive cycle of Mexico. We will start with questions. We have a question here, which has a less technical connotation. Much is said about the social tensions that can take place with inflation and with the aspects having to do with health in food. I think that the more important aspect is this security. I think that in the past 2 decades, we have started to see the prices of food getting higher in peak times. We see this. I think that these are energy foods. Yes, yes, exactly. That's what I'm referring to. We can see that we can have a very clear policies in food in order to stop this social tension that exists. We know that Mexico is one of the countries in the region where there is a less amount of social tensions in the past years, and this has to do with the equilibrium that exists in the political life of Mexico. I think that if we combine certain packages, support packages, to the poorer sectors of the population, and also combined with the reality that the political system has seen the peak in prices of energy products, then I think that we will be able to manage the inflation. Many of the countries of Latin America saw conflicts in social movements, but we also saw political movements that put their foot down and were able to work on other examples that we have seen, such as the Arab Spring. We did not get there, and we know how to detain the social crises and these clashes. I would like to add a couple of points here. The stimuli that is being given to fuels is costing us about 11 billion pesos per week. It's 1.4 of GDP. Yes, and we're seeing the control, quote, in quotes. We know about social movements. We remember in 2017, and I understand as well that we are losing resources that could be used in other things. The balance between all these elements, economic, social, political, etc., are handled through public policies. How do you see social unrest due to these the rise in costs? Well, I was looking at a paper of the World Bank, and I think that this trade-off between subsidizing gasolines and other transferences going downward, I think this is not an economic issue solely. It's a political argument as well. You have seen what has happened in Europe with the transportation system. They have a social problem, and I think that these aspects that have to do with social aspects are there, they're latent. So I think that the combination between the political and the economic aspects has to be an equation. And I think that the subsidizing of gasolines, and if you see the tax department, what it's saying, where the economic criteria come into play, we have to ask ourselves, how can we minimize the trade-off? And maybe what we should do is to have a transfer of resources. Maybe this is the more efficient way to go, but I think it's more political as well. Very good. Any other questions? No hands are raised? Yes? No? Maybe so. I always have questions to ask, many questions to ask. No questions? I was listening. I think that this is a very complex situation, and you have handled it in a fantastic fashion, especially after lunch when we're all rather sleepy here. So congratulations. On the side of employment and unemployment, let's say inflation and inflationist aspects. There is a stagflation expression in the UK. Do you can you tell me something more about employment and unemployment in Latin America, and looking at inflation and looking at the increase of payments, because the cases of employment are very low. And this is very different in the situation in which we ourselves find ourselves. This was going to be a question that I wanted to say. The labor market in Mexico is totally different. In Mexico, there are labor areas where there is no regulation, and in the labor, on the other side, all we have done is add rules and rules and more rules to it. When we see the unemployment rate with 3.5, well, we don't worry. It's pretty often seen that way in Mexico. Well, how is salary pressure doing? Could this pump up inflation? Well, in Mexico, there are things that really worry us. These are not reflections of an economic nature that one would see, where so when we talk about the formal side of the economy. And then, of course, we have to see what is being monitored, where we see the more dynamic sides of the economy. We see this in the manufacturing aspects, activity in the north and south of the country. All of this talks to us about a labor market which is quite tight, and in other sectors of the country, regulation is a lot more rigid. So we have to take into account all the different sides that make up the labor market. As Valeria was saying, obviously, in the labor market, what we're seeing is quite dynamic, even with the problems that we have vis-a-vis the global or overall situation in labor. Today, we're seeing unemployment rates in a faster fashion more often. If we see the recovery of formal employment versus informal employment, and this I have not seen this on a monthly basis after the pandemic, but in the year 2021, if we see a worker who lost his job during this first 6 months of the pandemic and tried to recover it in 2021, had a decrease in his income of 6%. And this is something that we're looking at in the United States, where we're seeing competition which is much stronger. The companies want to hire staff or personnel. And this has to do with your question, Valeria. How can we support employment? Maybe we're talking about just subsidizing a price such as that of gasoline. we can support or back the livelihood of the poorest section of the country, families. Sometimes recommendations are very technical, not political, but sometimes it's not that way. But why don't we talk about this? We're finding these in the deciles of maybe 80% in order to tend to this market that will rise up and get healthy. But here we might find a program for the renewal of the vehicular law which allows for recovery. All of this requires negotiation, calls for studies, deeper studies. But in as austere government throwing away money, we should try to have another aspect to make wiser choices in the purchasing process. In Mexico, also the situation with the outsourcing aspect in Mexico took us to be in the Mexican Social Security Institute, to be at the highest levels of history. And here, there are two analyses which are very hard to study. You have the highest rate of unemployment after many years, and you have an informal economy that we do have because we have a study in our institute for everybody that was coming out of the informal sector, labor sector, to the formal sector, or vice versa. And there could be 85 billion pesos for each point of that I should perhaps have a talk to you about and explain it to you. And the vision of what's in outsourcing came out of the picture and went to the Social Security sector. If you look at this, you will see that the number of workers is, of course, larger. We're at a historic level. Yes, but can an increase in wages generate inflationary scenario? Well, it all depends on the supply side, and as you know, here at the beginning of the year, there was an increase to minimum wages, which about was 25%, but again, in the lower deciles. And now it seems like this discussion that we always had with Alex and the central bank and the tax department, there are some things that are worrying us, where if we increase salaries, we give way to more inflationary scenarios. And of course, different to other countries, I think that Mexico still has a supply for some areas because it has some industries that are bottlenecks, but not cases such as in the United States. A few weeks ago, Juan Carlos and myself went to a program from to Hawaii. Do you know how much we spent on that trip? Nothing. I don't know if people are getting free checks. I don't know if we have this margin. I don't know if there's still leeway in order to be able to understand this phenomenon of the outsourcing, which was eliminated. Mexico has not recuperated or recovered the employment that they lost. Of course not. 97% has done away with outsourcing. Well, I think that with this issue outsourcing, we're going to come to an end of our discussion. In outsourcing, if you're not familiar with all the details, I think that authorities and the government of Mexico, when they said that outsourcing generated negative growth, other salary systems were affected, etc. I think that workers actually went from one company to another to work. It wasn't so much just the fact that this outsourcing program took place, and the activities of the central bank and the Ministry of the Treasury should be more active in this regard. I think that we should close up. I think that there's one more question back there in the back of the room. Is there one more question? Yes, here. Roberto Gomez from Comexi. Well, very quickly. From what you're saying, what is the role of international financial agencies? How can they help in Latin America vis-a-vis the different pressures that the countries are facing currently? Alejandro, this is for you. Thank you. I'll say something else besides that. First, yes, I do think, and regarding Mexico and Latin America, I think that the international financial organizations or agencies must be in a position to move their financial capacity in order to help Latin American countries, and this is something which can be very complex. High public debt, uh, inflation, which is high as well, and also the aspects having to do with growth. They grew quite high last year. This year it has lost important amounts of per capita income, between 5 and 6%. So I think that there can be a very important role for international agencies to help. The World Bank, IDB, etc. I think that it's quite paradoxical that the United States, on the one hand, is planning pivoting, and this is more for people having to do with foreign affairs in its relationship with emerging countries in order to contain the pressures that come from China, for example, and on the other hand, does not understand a more alacrity in movements in using bank services such as IDB in order to get the investment they want. And I think that there is a cycle. Sometimes we're saying that Mexico will have continued to be austere. Maybe the Fed is going to surprise everyone, and we'll see this in the curve, the performance curve, and there are different aspects that we're looking at. And also, inflationary situations can come from strategies from China and Russia and the United States. And I think that this could have around the flight of capitals, as was previously mentioned, and the possibility of a recession in the United States. I think that the raising of prices in mortgages and all of these aspects having to do with the purchases, it's very difficult. It's very difficult to do. And it's very difficult, excuse me for the analogy, of being able to land a plane safely in safe terrain. And nothing is more difficult to deal with than a pandemic and a war. We have some instruments that we can use, but there are parameters and statistics that come or go back 20 years' time in order to gauge the instruments accurately. And as Alex was said, I think Mexico is exactly the leader that it should be in Latin America, and I think that there are certain aspects that will help us very much in order to understand if if there are oligopolies and monopolies are not more accurate in order to create more competency. But I think that we're trying to send the right signals in order to be able to see that the strategic tools are in the oligarchy or in the monarchies. And thirdly, I think that what Banxico has done, it is before the curve, and it's in front of the curve, and not only the agencies that have access to money, but also the countries that have a position in our country are important. And I know that Mexico is destined to be a grand country.
I know we are a great country. Thank you, everyone.